Good afternoon. So I wanted to make a quick video on Sofi because it just provides such a perfect example of why shaper patterns are as powerful as they are. If you're wondering what I'm referring to when I say shaper patterns, be sure to check out let's pull it up here. Whoops. In the swing trading masterclass room here, watch this first video. It's about an hour long, but there's just so much value in here. These shaper patterns are going to really help to structure your technical analysis. You're going to understand what the stock is telling you. If you have some free time, be sure to watch it. But I'll kind of give a brief overview of what we're seeing right here and why this was almost predictable in a way. So when it comes to shaper patterns, you have a variety of different shaper patterns. You have a double bottom, you have a shakeout, you have a flat base, high type flag. But what this stock formed was what's known as a double bottom. And each of these shapers have their own dimensions. For the double bottom, you have to have from the top, which was the previous high, to the bottom of that shaper pattern, it needs to be contained to 35% of a pullback. Anything more, and it's kind of invalidated. So Sofi here, it topped out around June 14th, and then pulled back around 25%. And that was the lowest it went throughout the formation of this base. So you know right away that this is a valid shaper pattern. It then moved up, had a nice little thrust up before getting quickly absorbed by sellers and pulling back down. So after that first leg down, you have no idea what kind of shaper pattern is being formed at that time. You could right away, and you won't know this until you watch the video, say that it's not going to be a flat base and it's not going to be a high type flag because of how much of it pulled back. So that only leaves it to either a flat base, cup with handle, or a double bottom. In this case, it turned out to be a double bottom. You could honestly say it was either a double bottom or a cup with handle. I guess it's kind of, up to the individual. But it pulled back 25%. It had that move up, it pulled back again. So here, this is where I get double bottom, right? You have that first bottom, that first leg down that's caught at the same support level, and that second leg down that's caught at the same support level before moving up, pulling back, and then eventually breaking out, forming a runaway gap on a very strong catalyst being in the form of an earnings reaction. So we meet the criteria with regards to dimensions. 35% or less of a pullback, and I also forgot to mention that from the beginning of the base to when it breaks out, it has to be a minimum of 7 weeks. So here we have 1, 2, 3, 4, 5, 6, 7. So this formed within a period of 7 weeks. If it would have been shorter, I don't know why I'm tripping my words here. If it would have been shorter than 7 weeks, this would have kind of just been a continuation. Now, if we look at the daily one more time here, we now know that we have a double bottom shaper pattern. But what comes before that shaper pattern? Before you even think shaper patterns, which I probably should have covered this first, you need to have an initial strong move up. And that initial leg up is showing that there's clear demand for the name. There's clear institutional support. You have huge volume bolstering the stock up. You have, within this leg up also, you have what are called trend bars, which are really long-bodied candlesticks on heavy volume. And you can only get these kind of candlesticks to form in stocks that are, I'd say like 2 billion plus in market cap from the participation of institutions, because there's simply no one else with that kind of capital. So you have clear accumulation from institutions, and then you have profit taking. And this profit taking is coming from two different groups. The first are those that were bottom fishing or short-term traders. They're up a pretty penny here, about 86% move. That's the first group that's taking profit here and causing this pullback. And then the second group are all the people that are trapped from buying up here, thinking that they got a bargain, right? In bear markets, it's really common that people see a stock that initially had a really strong move up, like Sofi, that, they're buying a bargain when it's down, 60% off the highs, which at first glance sounds like, that's fair, but these stocks go down a whole lot more. So these individuals buy around here, around the $8 mark, $9 mark, and then within a couple of months, they're down 55%. And they're saying to all their friends and family, listen, I just want the stock to get back up to my break even. Once it gets to my break even, I just want to get out. I'm done with this name. That's it. So you have those people, and that's what's known as overhead resistance. That's why when you ever have a stock that has a lot of overhead resistance versus a stock that doesn't have a lot of overhead resistance or has no overhead resistance at all, you always go with the name that has no overhead resistance, because you don't have to chew through all of these people that have been holding, all the bag holders. So that's what kind of caused this to turn down the way it did. You had the short-term traders, and then you had those that are stuck in this overhead. Now, I want to quickly talk volatility contraction. This is known as VCP, volatility contraction patterns. And this I learned from Mark Minervini, one of the best traders of our current generation. So when it comes to volatility contraction, I want us to look at the top of this base. That first leg down from the high to the low was roughly $2.63. You can see it right up here, $2.60. We then moved up, and this time when we pulled back, we only pulled back $1.60. We then have a nice thrust up, retaking control, really. I would say that if you're above this line halfway through the base, the buyers are now in control, before pulling back this time about $1.10. So you go from $1.60 or $2.60 pullback to $1.60 pullback to $1.20 pullback. So each time the volatility is contracting further and further. So buyers are basically have a more firm grip over the sellers each and every time that stock pulls back. And this volatility contraction pattern is a key characteristic to a stock that is about to make its next leg up. And lo and behold, Sofi broke out today on monstrous volume. This is the highest volume that this stock has seen since it IPO'd. These are just short squeeze days mixed in with quad witching. They're completely irrelevant. This is a very powerful breakout day. We had something similar here, but the difference was you were in a bear market. So massive gaps up, although they may look pretty on the chart, the market environment is very important. When is that breakout occurring? Is it happening in a healthy market environment? Is it happening in a bull market or a bear market? Is it happening in a market where these kinds of gap ups are tending to work? Or is it happening in markets where they're not working, right? We're in a current market right now where the breakouts have been working. So this is where I take the risk. I don't take the risk here because they were all failing. You were in a bear market. It's just not worth the risk. Here, it's a little more worth the risk. In my opinion, I say it's a lot more worth the risk. So you're breaking out of a Shapper pattern, double bottom. This is a continuation breakout of the current uptrend here. So we have our first leg up. I mean, I would say this is the first leg up. Now you base, and now we're starting our next leg up, right? So our first leg up was about 130%. Could this next leg be another 130%? Who knows? I wouldn't put it past the stock. It's also very important there's a couple other things I could point out here based off of this breakout today. Number one, when the stock broke out, it left this gap unfilled. Many of you may know that when a stock gaps up, it often will fill that gap. And for the few times the stock does not fill that gap, it's showing immense strength behind the power of that move, whatever direction it's going in, whether it be breaking down or whether it be breaking up. So you can see here, see how we gap down? It eventually got filled. So this could get filled here, but it seems very promising to me that number one, we're breaking out of a pattern. And number two, it's on massive volume on a very strong catalyst. All right, what else? If we look at DraftKings, to give another example of the power of volatility contraction, Here we have a pullback of $3.70. Here we have a pullback of $2.50. And then here we have a pullback of $1.80. So big pullback, contraction, further contraction, breakout on massive volume. And also, if you note, this is obviously it's a very obvious level to most traders right here. So whenever you have a very obvious level, it's far more prone to failure when the stock attempts to break out than if it were to not be as obvious. So that's just a little something to keep in on your tool belt. Now, if we look at Sofi, or is it? If we look at Palantir, this attempted to break out of a high type flag, and you could see that although we broke out, what seemed to be successful at first, it actually ended up to failing and reversing. Once again, obvious level. It's going to lead to a lot of volatility. It's why I like to get in on the pullbacks prior to the breakout. Whenever a stock, I've noticed this through experience over time. I'm going to try to wrap this video up. I'm getting off track here. Whenever a stock fails to break out, what I've noticed is a lot of times it will pull back to the 21-day where the bulls will muster up one more attempt to break out. If that attempt fails, it means that stock more than likely needs to consolidate for another couple of weeks, perhaps months. But if it doesn't, and you get this, so basically if you ever see a stock that fails to break out, I don't know why I slept on this the way I did. It is what it is. But when it pulls back to the 21-day moving average, you could always look at that area as being a place to get involved. And obviously it worked wonders for Palantir, being up almost 23% in 4 days. So I just want to highlight, just how powerful these shaper patterns are. They really help give structure. For instance, now we have a runaway gap. This stock is likely starting its next leg up, providing the overall, the broader market remains healthy as well. What am I looking for here as a short-term trader? Hopefully Sofi goes up a couple more days and then pulls back. The first test of the 10-day moving average, I'll look to buy the bounce for a quick swing trade with options. I'm already involved with this with shares. And it also just tells you that we're now in the middle of a fresh leg up, where here you're kind of just in a consolidation. You're trying to, trade pullbacks, getting stopped out because you end up just being a chop. But I hope that kind of provided some insight as to how these shaper patterns can be used, and that it encourages you to go watch that masterclass video. I have a lot more coming with regards to that class. I've just kind of put it on hold this week because I want to get that alert room for the stocks going. So if you guys have any questions, please feel free to reach out. Thanks.